Hey everyone, welcome to this brand new series. This will be the Optimal Trade Entry Pattern Recognition series. This installment will be volume 1, and this is inspired by ICT or Michael himself. I believe this is one of the easiest trading patterns you can use for your trading. So easy to identify. Over time, if you back test it, forward test it, if you're watching price in real time, you will be able to frame these setups, and this could potentially be one or maybe your only model that you can trade. So this is one of the easiest models to trade. Typically, so how it's taught is you focus on the New York session, specifically from 8:30 to 11 a.m. That's your time window for optimal trade entry formations. And you'll see as we progress through this series, it's very consistent, and it will consistently give us that type of setup within that time frame or that time window. So let's go ahead and jump right into it. This is the S&P 500, and typically you will see these type of trade setups form on the 5-minute chart, because we are looking for intraday setups. Not necessarily, don't have to be quick in and out scalps. You might get those every now and then, but you are looking for a big part of the expansion. So an intraday setup, the New York expansion, to be more specific. So let's go ahead and jump right into this video. As we can see here, I have my annotations hidden, and I'll bring them back up just in a second here so you guys can see. But this line here, this line is our true day open. This is 12 a.m. New York time, and as you can see, this is our London session. Price starts to give us like a slight Judas swing, starts trading lower after that, comes back up, runs the buy side liquidity, then comes back down. We get a shift in market structure. After that, we come back into this area here. So we'll go ahead and go into that after I put the annotations on. Then we start trading lower aggressively, come back in, and then we go get a little bit more displacement lower, come back into. I'll explain this. So if anyone wants to pause the video, now is your chance, and see if you can see what I'm referring to. Otherwise, I'll put the annotations on right now. Okay, so these are our annotations. So this is Wednesday's November 2nd, 2022 New York session. This is an SPX or S&P 500 optimal trade entry. So this is our London session. It starts here at 2 a.m. London kill zone. We can see price comes up, trades higher, runs the buy side, then breaks down. We started getting this consolidation here. Start trading lower, and then we come back into the New York session at 7 a.m. Come back in, perfect delivery here. We have this little breaker here. We go into that with the candles. Notice the wick here and the candle bodies here. These last two down close candles before this move up. Price respects that. We trade lower. Then we come back up. What is this? This is a bearish order block. Price respects that here, but we're specifically focusing on this here. This time window. This is our 8:30 to 11. So this is where you will see these setups typically form. It's very time specific, so we will focus on that. This is an order block plus fair value gap at OTE, optimal trade entry. So we'll go ahead and put our fib on it, and you guys will see how easy it is to frame these types of setups. We'll go frame our anchor, our fib from the high down to this candle's low here. And we can see we reached the 70.5% retracement. Perfect delivery. These last two up close candles before this candle here moved down. This is our bearish order block, coupled with this imbalance here. This candle's high, this candle's low, this candle's high, gives us a nice sell side imbalance. Price trades up into this. This is around 8:55 a.m. the first time we get a nice touch going into the optimal trade entry or into a premium. So we're looking to sell at a premium, and if we were to be looking for buy setups, we'd be looking to buy at a discount. Since this is a sell setup, we have to focus on selling at a premium. Now, one thing to note here, very important, is this is the previous daily low, and this is in the form of a low resistance liquidity run on the sell side liquidity, meaning we have higher lows across the board on this side. I'll go back to the chart, but you'll see as low resistance liquidity run is just liquidity run just waiting to be taken out. And since this is perfect delivery here, as soon as we come up, we trade it below it. So we're looking for a run on a previous daily low. That's our bias. Our actual framework is this setup here. We're gonna anchor our setup on this M5 chart, but our bias, we are focusing on the higher time frame. Always focus on the higher time frame. And since this is the previous daily low, we are expecting price, because we are seeing the strong displacement lower since London session, and then we are seeing this displacement here, and then one more here. This is a big confirmation, big smart money footprint, confirming our short bias. So this here is our perfect entry. I'll go back and I'll show you guys what I mean. This is the previous daily low, and you can see we have higher lows across the board here. We have these higher lows here, this higher low here. So all this here is just sell side liquidity being just waiting to be taken out. This is the form of a low resistance liquidity run, meaning our higher low to the right. We have a higher low to the right every single time we're making higher lows, meaning this is low resistance. So we go back to this setup here. Price trades down, we get a strong displacement, come back up, optimal trade entry, 70.5% retracement, order block plus fair value gap at OTE or at a premium, and we get a strong move down. Typically we are looking to take some off at around half of a standard deviation, or 50% here. Here we have our one standard deviation here. We'll take a big chunk of the move of the position off here. So this is a nice move here. We take a big chunk off, and we would probably be looking to trail our stops here into profit, or at least break even once we're down into this zone. As you can see, price starts consolidating in this area. We have this nice sensitivity here in the zone. We get a nice move down, come down to the 1.5 standard deviations, and then as we can see, price reverses after that, but pretty accurate on this algorithmic delivery here. So hopefully you guys enjoy these videos. We'll be doing a next installment probably here in a couple of days, and go ahead and guys study these examples. Remember, 8:30 to 11 a.m. is our time window to frame these setups. Hope you guys enjoy this one. I'll see you guys in the next one.